morning, guys. Good morning. All right. Oh my gosh. Okay. Let's get OBS out of the way. Okay, dokie. We are live. We are ready to get started with the markets today. Let's get this sorted. This. All right. Perfect. Let's get my X up. I like to have my news, my source of news up. I hope everybody's having a beautiful morning. Thank God for another beautiful day. Okay. What else do I need here? This. All right, guys, let's get started. I got my chat live now so that we're able to ask some questions. Happy to do it for you guys. So we're 17 minutes into the day. It's already 8:39 Eastern Standard Time. First thing is first. We got the Forex Factory. For those of you guys who don't know what Forex Factory is, it is a source of news that gives you catalyst events and the impact that it has inside of the market across the world. This is all the markets. This is the best source of information to get a non-biased standpoint and real factual information inside of the markets. Okay? Doesn't look like we have too much today. U.S. markets, ADP non-farm employment change is going to be at 9:15, so that's about 1 hour or 45 minutes from now. 11 a.m. we have ISM services PMI. That is going to be at 11 a.m. or 10 a.m. I think Eastern Standard Time. I'm not sure if we have a government shutdown right now. It is warning me right now that we might have a government shutdown. Let's just take a look at that. Alright, so he ended the government shutdown. I'm sure it's over ICE, or it has something to do with ICE. I see. So we have been shut down conveniently over the weekend. What would that have done? Yeah. I mean, that's kind of like a bullshit story, if you ask me. Like, I wouldn't really say that, you know, that would be news. More along the lines of, it just sounds like something that they're putting out there for the people who are that base level consciousness that hear and see and believe what they, or yeah, hear what they believe and see, and they don't see the real truth. House could open or reopen Monday. I mean, this is the stuff that they report on nowadays. This is crazy. This is why I legitimately do not watch the news. This is really important, guys, to go through every single morning. Just try to find some news, some catalyst events that are also happening. For my example, you know, I'm just looking into the United States markets right now, seeing what else could cause some catalyst events today aside from Forex Factory. I don't know. Let me see. Doesn't really look anything too interesting for me. So, all right, back to Twitter. I also go into Twitter. I go into Walter Bloomberg, great source of information. Silver up from our $72 support. I've mentioned this a few times in the past that $72 is going to be a absolute key level for silver. Now, a lot of you may not know this, but banks were shorting silver. How do I know that? Well, to be honest with you, banks love to short stocks. I mean, this is not a new thing that they like to do. Hedge funds, banks, they take the financial information of things that they can control and then try to control the price the best that they can in order to make a quick profit. You know this because inside of every quarterly report on major banks and hedge funds, you can see exactly where they're making their money. I forget the page. I think it's usually between page 20 to 30 on their reports. I'll have to pull it up for our next video. But that's going to be something that's very important to look inside of the market. We have today we're going to go ahead and explain EMAs and VWAP. And then I'll get into disjointed channels inside of the market so that you guys are able to get a idea of the continuation of our trading plan. Yesterday was part 1. Today is going to be part 2 of how we trade inside of the markets. So first thing is first. You know what we do? We delete all of our levels for the day. Yeah, I know it's painful because sometimes it's a lot of work that goes into making these levels, but it really shouldn't be that much work. All right, we can see from our top-down approach, not much has changed. In fact, we're kind of consolidating here. Remember, inside of the markets, we have our 4 phases of the market. Okay? The first phase is considered a consolidation phase. It's going to be P1. This is usually range-bound trading in the markets. Where there are no new highs or lows, but instead price is getting rejected at the nearest resistance. It's getting rejected at the nearest support, trading inside of a parallel trend, right? We know this as P1. Our next phase inside of the market is when price does something like this, where it makes 2 lows that are equal to each other to a test of the resistance and a break. Now, this is a pro tip. When you have this break here, typically what happens, it's not all the time, is price comes back down because sellers wanted to get it back into the parallel channel and continue trading it sideways, right? And push it obviously down in their favor. Sometimes that does not happen. What you have is a test of the resistance and what's called as a support or a resistance, right? A resistance to support flip. I'm sure you guys have heard that term before. So a resistance to a support flip is super important because that indicates a mark-up period, right? Price action is now going to start going up and it's going to start making new highs. It's not going to be a linear line. A lot of people believe that price just goes like this. No, it's more of a chop. So we need to make sure that we're capturing this kind of a trend and buying on the lows, the higher lows. You can't predict the higher lows, but you can get a general idea of, okay, I want to start buying as it comes down and then holding it as it proceeds to come up inside of the phase 2 markup, right? So this is what's known as the phase 2 markup period. Remember, I talk about this a lot because if you understand phases of the market, then what's going to end up happening is you're going to become wildly successful inside of the market because this is what you train your eyes to see every single morning on our market approach. Sometimes price can even come back down as far as lower than the last low. It tests the parallel channel only to rebound at a higher high. Price loves to do this. It's actually the fundamentals of the market of what we call fake outs, right? People want to try to get into the position right here. They get into the position, it fakes them out because it will go a little bit further outside of the parallel channel. Bulls will then reassess power inside of price action, pushing it higher until we get to another resistance. Now, this other resistance is very similar to the first resistance that we encountered inside of the markets, but instead, we now make a new parallel channel. I want you guys to get this really clear inside of your head. This is the opposite of a regression channel. So we're not regressing, we're progressing in a direction upward. This is part of P2, right? Phase 2 is known as a markup period, MU. When you get that inside of your head, you're going to understand the markets very, very well. A P1 is an accumulation phase, right? Price action has a support, it has a resistance until the resistance is flipped to the new support and a markup period is then commenced. Now, what price is going to do is it's going to trade back inside of the new resistance and the new support, right? It's going to look something like this. And I'm doing it outside of the lines just to show you guys price action is not perfect. Then what something might happen is, right, we have another pattern that comes inside of the play. And in this case and scenario, our P3 is another accumulation phase, right? But instead of this being accumulation, this is known as consolidation, right? This is a very dangerous place to go long, because unless price action continues up like this, which it does sometimes, where again, resistance is going to be flipped to a new support, right? On the other hand of this, we have something that's called a support to a resistance flip. That's right. So what can happen on one side of the market can obviously happen on the other side of the market. So what if price action comes back down and tests this support, and then support is then broken, right? What ends up happening is now we have a support to a resistance flip. Bears have now taken control of the market, the price action inside of the market, pushed it further down. It comes and tries to retest that level up here, right? That newfound resistance. And what ends up happening is we get rejected. So it's very important that once we have the consolidation period over, that you don't just re-enter the position here. Typically what pro traders are going to do are they're going to wait until it comes back to test to the resistance to see if it comes back into the parallel trend. If we get to the newfound resistance and price action does not agree with continuing back into the consolidation, back into this parallel trend, it's going to mark a new phase in the market, which is P4. This is what's formerly known as a markdown period, right? Markdown is where the most money is made aside from the mark up period. So there's a lot of money in these two phases right here. As a trader, this is where you want to focus making the most amount of money, because what's going to end up happening is you're not going to get caught in chop. Chop, we talked about it yesterday, is the worst place in the market to make money, because what ends up happening is you get frustrated because you can't time the supports and resistances. You guys don't have the XP points yet, or maybe you do, to understand that these levels are basically the lifeline that you're going to have inside of the markets. All right, so I'm glad that I was able to show that for you guys. We're going to go ahead and talk about the next job that we have inside of the markets, right? And that's going to be mastering the EMAs. Okay, so first thing is first. Let's get some levels on the board. So as you can see, the price action right now is consolidating. This is very evident that we're now in a P3. Late P3. That's what I would say. Alright, so I made my levels. Nice and easy. Don't need to talk about it, just need to do it. Remember the templates. Makes my life easier. This saves me a whole bunch of time trying to figure out and type everything out. I am so cold. I'm gonna put a jacket on. My office is freezing right now. Cool. Nice little jacket, keep me warm. I like my hoodie up. Okay. Woo. All right. So here we go. We got our levels today. But what's the game plan, right? Levels are one thing, but it's not just doesn't give us the plan. As you can see here, I'm going to show you guys another technique before we get into the EMAs. I used a parallel channel here. And instead of making a parallel channel, what this looks like to me is consolidation into another to a smaller bear flag, right? A bearish flag. I'm sorry. I don't really think it's kind of a bullish flag pattern because it's not decreasing. You see what I mean? Or it's not, yeah, it's not decreasing. So this would kind of go the other way. Kind of curious to see what it would be in a regression trend. That's fine. I like that. So there's our channel right there. The charted lows, the charted highs. We're kind of at the lows here, testing the support. So this is going to be taken off now. We don't need that in there. That's just an extra piece of information or a tool that we use to see what is the picture telling us. This will be the hose zone. Boom. Boom. I like that. Remember, we used the 15 minute just to check our levels. This is a confirmation. Look how beautiful that is, right? Right? 26.55. The high point is 26.413. We're going to trade this. This is our chart today. We're going to trade, we're going to learn from, and then we're going to grow and make the best trades possible. Okay, let me zoom in on this so you guys can see it better. Okay. I don't think that I'm going to be able to make any other trades today. Let's check the spread. It's about 250 points inside of this box. To be completely honest with you guys, I don't think that I would be happier to trade anything else if it's going to give me issues outside of this box. That means that I'm going to have to stay very patient today on making a trade. Everything is bearish, mind you. So no need to rush. Where did I put my save button? There it is. All right, guys. So we're gonna take longs over the pivotal level, shorts below the support, but anything else besides that, we're not really gonna put a lot of effort in making trades on MNQ today, just because it's chopping around inside of this box since early this morning and late last night, early this morning. So I want to see the volume pick up here before we start to get into any trades. Now, the thing that I want to show you guys is EMAs, right? What they're called is exponential moving averages inside of the market. This is really important on understanding price action. So we can see today that the majority of the wicks under the Heikinashi candles are underneath these lines, which means that the mean is showing us the mean is indicating that price action is bearish. If it was over these lines, then we would consider price action to be bullish. It's very, very simple. VWAP is the volume weighted average price. It's another indicator of means. So you can use one or the other, but don't use both. So right now, if price is over the VWAP, then that means that we are bullish. If price is under the VWAP, then we're bearish. It's so simple, right? Typically right now we want to stay short inside of the market, because you can see when we have a crossover here, we have a really nice upward movement. But sometimes when it gets close to trying to flip the support to resistance on the VWAP, you have what you have is a lot of chop. Like here, this would have crashed out a lot of traders. And the reason is why. We learned it yesterday, and I just want to see if you guys will know. So if you guys said it to yourself, we're trading in between levels. This is why I tell you to avoid trading in between levels, right? Here would have been a good reversal trade, but you're not there yet, right? You can see here on this candle wick that it's a tweezer wick close with strong support, on this pivotal level with volume picking back up. Another thing that you can put inside of your charts when you go ahead and put indicators is you click this button and put volume. Volume is a huge play in a lot of trades. So if you can see here that there was a lot of selling volume, they'll only pick up on a one volume bar on a bar graph. So we would have said, okay, buyers are starting to step into this price at this pivotal level. We already had this level planned out, but it's not a guarantee that price is going to stop here. It is simply just price saying that we could stop here. This is a key level for us. So what we learned on the EMAs today is that there are 3 different types of EMAs. You can go into your settings, this cogwheel in the left-hand corner, and you can go to input and input the length of each one of these EMAs, which I have the 9 EMA, the 20 EMA, and the 50 EMA. If you're using those indicators, it's going to help you a lot to know how long am I staying in this trade and why am I staying in this trade. And it's very simple. In this case and scenario, you're staying in the trade because the indicators are telling you we haven't flipped yet. Volume hasn't picked up in the other side's favor. So whatever we had conviction on, we stay into the trade until we have a crossover, at the very minimum the 20. The 9 EMA gets crossed over a lot, but it could be an early indicating sign to start to take off from your positions, right? Deleveraging. That's what we call risk management inside of the markets. When you deleverage, it's something on like the 9 EMA that gets flipped. So let's say we'll cut 50% of our position. If the 20 is flipped, we cut 75%. And then finally, if the 50 is hit, you most likely are at break even on your trade, so you close the rest of your trade. Simple enough, right? So we got our levels today on MNQ. These are going to be a pivotal level for us. Remember, I'm going to set my alerts so that I can set and forget and work on some other stuff while I trade. I click the support. I make it ring. Okay. I haven't touched MES, but as you can see, we're in that parallel channel. Let's back up here. We're inside of that parallel trend channel that I made. Shorts. We'll make shorts below this level just to give it some grace. Longs over this level. Why I'm giving it so much grace is because if we get down to this bottom, we already have a 3 touch, right? So the parallel trend is still upwards, but you can see that we're scraping the bottom of the barrel with volume here. We're only really getting the real volume at around 9:30 each and every morning, and then it starts to die down significantly. So right now we're battling and chopping on the VWAP. So I would love to see if SPY can have maybe like a 30% correction at this point. Staying very patient in my trades. I'm not rushing anything, just so I can get the best outcome possible on Mez. So again, I'm gonna put this box on our Twitter. I'm trying to do this quick and save a little bit of time, because I know some of you guys might need to go to work and stuff like that. So remember, we're only putting 26 more minutes into this. Okay, what's gold doing? Pro tip. Now we can see where trend is. Trend is up. Just drew a parallel, or I just used a trend line. You can see it's scraping the trend right here. Let's see if it breaks back into the box. If it does, then what's gonna happen is, here we go. This is the game plan. Longs above this level. I would love to have shorts below this level right here. The hoe zone is gonna get changed and moved to right here, my boy. That look good? Looks good to me. Not gonna change any of the levels on gold because I like to keep them where they are, just for my own sanity. Okay, sorry, I just needed to do something real quick. Got dead man mode. I'm just not training right now. All right, so gold. Let's check silver out. Silver, I will delete my levels just so I can see exactly where it is. Boom, boom. Remember, I had shorts at these levels, guys. So if you made a killing on that, make sure you comment "made a killing" on this YouTube video. This is what I'm going to show you guys today. I want to see the retracement, how deep we are in the retracement, and what's going to go on next. What's going to be the next game plan. Dragging this here. All right. I'd like to get back into the 105 area just to consider shorts right now, but the trend is up. Maybe we did have that consolidation period right now, but I wouldn't be getting excited about any positions inside of silver right now. That was a very healthy pullback, honestly. I really don't think that that was a huge problem for the markets. I think it'll price it in. It'll price in nicely now. Check it. Sorry, my eyes are super itchy right now. I've got a dog in the house, and I'm allergic to their hair. Okay, cool. So we have our levels here, boys and girls. We're in between two really key levels here on silver, and that worries me because usually between these levels on the regression pattern or the Fibonacci sequence, we have a make it or break it moment. So I'm just gonna put the support and resistance here. I'm gonna change this to key support at 72. Okay. Let the rain fall down. Let the rain fall down. All right, shorts are only going to be valid here. Longs, I would be taking long-term longs here. Nothing too crazy on silver. I still think it's a very strong investment from what is going on in the world. I really hate that picture. Can we refresh that? So I don't this dude's staring in my eyes right now. Okay, cool. Silver is done, taken care of. All right. So we have all of our indices now finishing all of our commodities. The last few things we're gonna do today is take a look at cryptocurrencies. Beautiful. This is a really good opportunity to talk about disjointed channels, right? I had talked with my friend, right? We made this game plan on Bitcoin. I said that inside of this disjointed channel, all that we're doing is really squeezing. So price squeezed to the high side, but lost steam at 9,600, right? So at 96,000, we no longer could push that psychological level of 100,000, and what ended up happening is we pushed back down inside of that disjointed channel. A disjointed channel is essentially a resistance and a support line that squeezes tighter and tighter, and this is what we know as a squeeze, right? I say it 4 times in a row, but squeezing is the most important nature to price action and trading, because it's basically setting itself up for a really nice move. It's basically a tennis player that's throwing up the ball, and he's gonna hit it and slap it down at 100 miles an hour for you guys to be able to capture a really radical move up or down. In this case, we went up to come back down. That's formerly known as a fake out, right? And what was really important here to know that the reason why like we would not have gone long in that area, and the reason for that is because this long area, you guys need to get used to this word, a dead cat bounce, okay? Dead cat bounces inside of the market are awful for traders. You're gonna the first time that you're ever gonna hear that term, it's not gonna make sense, but it'll make sense as soon as you get caught in a dead cat bounce. Okay, so a dead cat bounce is temporarily short-lived recoveries in the price of rapidly declining assets such as stocks following continuation of a downtrend, which represents a sucker's rally, where investors mistakenly believe that price has bottomed out. This pattern is often identified in hindsight, suggested that the downward momentum is merely just paused rather than reversed. Here's a couple examples of a dead cat bounce, right? We do not want to get caught in price action, where I think this is a really good photo. Here you go. Right, so you have a Fibonacci retracement back to the 0.5, 0.618 area. You would re-enter underneath that 0.5 area just to take profit, coming all the way down. This is what's known from a P3 phase to a P2 phase to a P3 phase to then a P4 phase back to P1, right? We talked about it a little bit earlier. Phase 1 accumulation to a mark up to a consolidation, a support to resistance flip, back into a P4 mark down. So make sure that you have this memorized, because this is what's going to make you super successful in the markets. Okay, so cryptocurrency right now looks like it is bottoming out at this 74,000, but again, we're on a really strong downward pull here. I would not be surprised if we get inside of this box right here between 65 and 60. It's going to cause a lot of insolvency inside of the market. A lot of people that are leveraged long here are most likely going to lose a lot of money, and the reason being is because they have no idea what they're trading or why they're trading it. Ether, I'm really interested in buying these levels at Ether right now. You can see that this is now the bottom of a trend, the bottom of a path that we've now driven ourselves down to to almost the yearly support of every single month this year so far, or I'm sorry, for the last year and the previous year before that. A lot of people start to pile on spot position longs here because it's just a very undersold asset. We're at the bottom of the 52-week range. Although we're not completely there, this is a good place to start building a spot bag. Solana really beat up as well. Honestly, I'd say like this is a perfect place to build a spot bag, because I don't really think that we would be pulling back to $20, maybe as much as 70, but then again, you know, that would take a lot from the market, and we would have to have a huge catalyst event, and I don't think we're there yet. Reason being is that, you know, the United States right now, especially under Donald Trump, is very pro crypto. So, you know, taking that with a grain of salt, I know the markets are down. This is just the perfect place to build a spot bag. So today, yeah, exactly. I'm sorry, RK, I missed your thing, but yes, the dead cat bounces, making the illusion of breaking a resistance, and then it does go back down. That's really dangerous inside of dead cat bounces, because personally speaking, I have gotten caught a lot of times in dead cat bounces in the market, and I've lost a lot of money because I couldn't put my ego aside in order to get the best opportunity out of a market. Those are, oh, Rashid. Ah, what's up, my brother? What's up? Thank you for coming, bro. I appreciate you coming back in here and helping me out. So yeah, man, these are the markets that we're dealing with right now. I mean, as you can see, the picture, the greatest picture that we're being given right now is that we're at the lows of the market. The 52-week lows are important to start buying and collecting the best amount of, or the most amount of crypto that you can. These red days to me are fantastic opportunities to buy long, hold it, and not look at it in the long period of time. Markets have usually tend to always go up. So let's take a look, right? Yeah, we have came back down, but remember, July of 2022 to 2023, that was a really special time for crypto. I mean, like getting in Solana at $20 was a very cheap bargain. What I would like to see something happen on cryptocurrency is Bitcoin starts to flip and it starts to show signs of improvement. People are then buying the crypto back. Usually what's going to end up happening is hedge funds are probably going to move the price back up a little bit, and then retail will pile on. But at the present moment, I would be very careful putting too much equity inside of the market so that you don't end up getting like caught with a with your hand in your pants in public. You know, you don't want to put yourself out there with too much leverage. You want to have more cash on the side, buying a little bit each and every week, and that's what we call formally as a dollar cost average strategy. It's a very, very old market strategy, and it works for a lot of people. As we buy on red days, we just buy a specific amount, and that's it. We move on from that. So let's take a look and see if we can find any meme reversal strat or meme shorts today. I go inside of my crypto brokerage, or what I do is I go to Coin Market Cap, which is a little bit better. And then we're gonna get off because I gotta get ready to trade the markets if we have a trade. I can tell you today, I most likely think that we're not going to have a trade down here. Yeah, nothing really interests me on this chart, so we'll skip that for the day. I really want to give a good lesson on that rather than try to force a trade on cryptocurrencies. So today we have our game plans. They were all posted on our Twitter today. If you're not following, send out a follow, and then also a notify when there is posts being made so that you can see all of the game plans that are made every single morning. In this case and scenario, we're trying to find longs over 25,575, shorts over 25.50. The spread is really large on that, but again, I want to try to get into the best play possible so that I'm not costing myself time and equity. Mez is looking a lot better as a chart over 26,976, under 26,896. If we can get into those levels or those ranges and break this box, then I would be really, really excited to getting into longs or shorts. But until then, I'm going to be sitting on my hands. Remember, we talked about EMAs today, how important they are to understanding where price action is. If it's over an EMA, especially the 9, we want to be bullish. If it's under, we want to be bearish. Same thing for VWAP. Over, bullish, under, bearish, right? Those are the weighted averages inside of the market. A price taken over a course and period of 9, 20, and 50 days. Every single price is recorded at the end of each and every day, and then it's taken and divided by the amount and number that there is. So that's my lesson for you guys today in our 1 hour market session. I'm really happy for everybody that showed up today. Tomorrow we will be doing this at the same time. Good luck on the markets today. Set your alerts. Don't get shaken out. Don't feel like you have to force any trades today. For the reason being is that we'd rather keep money in our pocket than go and bet to somebody who's just going to be able to take it out of there really quickly. Look, price action is not doing much. It's a sideways day. Stay cognizant of that and ultimately be safe inside of the markets. Trade what you see, not what you feel. I'll talk to you guys later. Again, 9:30 tomorrow morning. I hope you guys have a great rest